Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW S008 traders. The title of this video is Trading Fibonacci Tips and Tricks. Alright, in this video I want to share with you a very effective Fibonacci trading strategy that one can use for day trading, swing trading, and investment purposes. All right. In order to achieve consistent winning trade, talking about day trading, swing trading, and also to make excellent investment decision, one must find a valid setup. So you want to day trade, you want to swing trade, you want to invest, you must find what we call a valid setup. Now, there are two types of setup. We have a technical setup, and we can also have a fundamental setup. All right? A fundamental setup may be, for instance, if we see, for instance, a new competitors coming to the market, all right? And these competitors start gaining more market share, that may have a negative effect on the current dominant force, so to speak. All right, we have seen that recently in London, where we see a lot of retailers coming to the market, and they have a negative effect on Tesco. For instance, because they were gaining more market share, they're becoming more popular. This is a fundamental setup, all right? We also have a technical setup. In this video, we're going to talk about technical setup using the Fibonacci retracement. The level that we're going to talk about is the 50% and the 38.2%. Pay attention carefully to what we're going to discuss here. And at the end of this video, all right, if you have any comment, put it below. You have any question, put it below. And try to test it first, test it before you use it in real time. The strategy is very simple, all right? So what is the setup we are looking for? We are looking for a double top or a double bottom chart pattern. That's the first condition, all right? So the double top is a validation of a resistance level, all right? Provided that the price break below the notch. All right. So if you are following us already, you should know what I call the notch. All right. A double bottom pattern is a validation of a support level, provided that the price breaks also the notch. So when we see here the price, you see I draw a line here. You see the price. This is the blue line represent a move down, a move up, a move down, a move up. So we have a double bottom pattern. Can you see on my chart? Are you with me? I'm talking about this drawing on my chart here. It's a double bottom pattern. What I like to call the notch is this one here, this level here. So if the price breaks above the notch and finds support, it's confirming to us that this level here is a valid support level. The opposite is also true when we see a double top chart pattern. If the price breaks up below the notch and finds a resistance there, is confirming to us that this level here is a valid resistance level. So a double top is a validation of a resistance level. A double bottom is a validation of support level. Remember, we want to talk about trading Fibonacci, tips and tricks. And we are looking for what? The setup, all right? The setup, double top and double bottom. So once we see the double bottom pattern, so you see a double bottom pattern here, and the price start going up, okay? We will prefer it to break the notch to confirm to us that this level here is a valid support level. So after the double bottom, we want a strong bullish progression, price going up dynamically. We want it to go up, okay, with force. All right, you understand? Go up strongly. As it go up and breaks the notch, if the price pull back into the zone of 38.2, I will prefer 50% Fibonacci retracement level. Why? Because the 50% Fibonacci retracement level is the third psychological price level. So, though we can also implement this strategy at 38.2%, I recommend to TSTW SY008 traders and TSTW34 traders to pay attention to the 50% Fibonacci retracement level. So as the price went up strongly and pulled back into the 50% Fibonacci retracement level, that's what we call a bullish setup. A double bottom pattern, a strong bullish progression, a pullback into the 50% Fibonacci retracement level. The three conditions form a bullish setup. Now, do we buy straight away? No, we do not buy straight away. All right? I will be recording another video when I explain to trader when a trader can buy straight away when they see a setup. Okay, that will be back straight away with a fundamentals. Okay, so price pull back to the 50% Fibonacci retracement level. The strategy that the professional traders, investors, swing traders, day traders are using, price pull back to the 50% Fibonacci retracement level, they will now implement what we call the trading drill, all right, or a top-down trading method. So now this is the setup. We go to the signal time frame. We wait for a clear-cut signal, all right? Once the signal is given, we will go to the entry time frame. The entry time frame is about considering, so you will check the risk-reward ratio. Is it worthy entering this trade? Sometimes you may see a setup, a signal, but the risk may be high or the market environment may not be suitable, so you can just walk away or laugh loudly and let other traders take it when you keep your money in your own bank, all right? So we are using a top-down trading method. After we see the setup, we go to the signal time frame using the TSC-WSY008 or 24. For TSC-WSY008 trader, we use the TSC key 02 on the entry time frame to enter the trade. So after the setup, we implement the trading drill, which is a top-down trading method. They set up the signal at a low-risk entry point. The next thing that we need to do, pay attention. We must use what we call the trading triangle. The market first, the sector before the individual financial instrument, checking the economy news and the fundamentals at Google Finance, Yahoo Finance, or Forex Factory if you are trading Forex. Doing what we call the due diligence, combining the technical trading and the fundamentals. All right, that's the best approach. So a double bottom pattern, price break above the nut, price rally up big time, pull back to the 50% Fibonacci retracement level. This is a bullish setup at 50% Fibonacci retracement zone. We now use the top-down trading method to enter the trade, and we will also pay attention to the trading triangle. What the professionals are doing, as they receive a signal around the 50% Fibonacci retracement zone, all right, they will place their stop loss below the 61.8% level. So we are looking for a signal around the 50%, and we are placing our stop loss behind the 61.8% Fibonacci retracement level. It makes sense? But again, this depends on the risk tolerance of any trader. Sometimes you may see that if you're on a monthly chart, it requires a lot of money to move your stop loss behind the 61.8% level. So it's up to you whether you are happy with the risk that you are taking or you want to enter the trade bit by bit. Now, that's another matter, okay? For a double top chart pattern using the Fibonacci retracement, so we see a double top pattern. We want double top. We want the price to start going down strongly, big time, going down strongly, all right? And the price to rally up to the zone of 50% Fibonacci retracement zone. Now we will implement the trading drill or the top-down trading method, the setup. So this will be the setup. And then we go to the signal time frame and we use, okay, we enter the trade on the entry time frame at a low risk entry point. As always, we must check the risk-reward ratio. Is it worthy taking this trade? What is the market sentiment? What is the market environment? And also, we don't want to forget the trading triangle. So double top, price goes down big times, and then rally back up to the 50% zone. Sometimes we may see that some stock will stop at 38.2% level, but as I explained to you, we will prefer the 50% zone. We want the signal to be near the 50% zone so we can hide our stop loss behind the 61.8% level. All right? Let's check how long I've been recording this video now. I have a bit more time. So you see now, very simple. Very simple and also powerful. But we can use the same strategy using another pattern. This time, instead of using a double top or a double bottom, we can use the head and shoulder pattern or the inverted head and shoulder pattern. So price goes down, displaying lower lows, lower high. And then you display, now it went up, okay, a bit like this. And then we have the head here. Are you with me? Follow my drawing. And then we have, okay, another low here. And this is an inverted head and shoulder pattern. All right. So in this condition, the low here, you see, this is another psychological price level. The low before the last low is a psychological price level. The 50% level is a psychological price level. The high before the last high is also a psychological price level. So we can use this strategy also for an inverted head and shoulder pattern. We want the price to break the neckline. This is the neckline here. For the double top, we talk about the knot. This is the knot here. For the validation of this support here, this low and this low here, as a valid support level, the price must go above the neckline. This is the neckline here. If you don't know about the inverted head and shoulder pattern, Google it or go to YouTube search it, and you see loads of video posted by my fellow colleagues on YouTube, all right? The neckline is broken. What you need to do, you want to use the 50% Fibonacci retracement level, not from here, but the last move here, this move here, from this low here, the right-hand side shoulder, okay? This one. So you will ask the price, you see here, attention please, price goes up from here to here. This is the session that you are interested in. So in this session, the price might go up strongly, very strong up, good. And then we pull up our Fibonacci drawing tool, and we want to know where is the 50% Fibonacci retracement level, all right? And we want the price to pull back down into that zone. You see this session, not from here, but here. This move from here to here. That's why we are using the Fibonacci retracement level. And we want the price to pull back a bit after breaking the neckline into the 50% Fibonacci retracement zone. This will be a bullish setup for us. And then we will use again the trading drill and pay attention to the trading triangle to enter the trade. As always, we want to combine the technical trading and the fundamental. This is my approach. This is what I recommend to traders. Check Google Finance. You are trading stocks. Check the economy news. Check the balance sheets. Do what we call the Google Finance acid test. And keep your eyes wide open and also your ears, okay, wide open. It makes sense? So, an inverted head and shoulder pattern, price breaks above the neckline. This session here, price pull back into the 50% level of the move from here to here. That's a bullish setup. Now, we use the trading drill, pay attention to the trading triangle to enter the trade. The opposite is also true when we see this time what we call a head and shoulder pattern, all right? So price went up, display high, pull back a bit, and display again a higher high. Now we have the left-hand side shoulder, okay, price pull back down and display the right-hand side shoulder somewhere here. Good, all right? Now we have what we call a head and shoulder pattern. The price must break below. My apology to traders. I don't want to remove all my line because I need them later on. So just follow me carefully. When now pull back, when now pull back, when now pull back. Now this is the neckline here. What are we paying attention to? We are paying attention to this session here. Stay with me and focus. All right, okay? This session here, this is what you are looking for. This session, price, this session that the move that we break the neckline, that's what you are watching. Here again, the move that we break the neckline from this low here. Here, the move that we break the neckline from this high here. All right? We know that this high here is a psychological price level because it's usually equal to this high here. This high here is usually equal to this one very often. So the high before the last high is a psychological price level. All right, if you want to know more about psychological price level, check our videos, or you too search it, psychological price level, the first psychological price level, the second psychological price level, and you see video posted by myself, okay, at Joe Trio channel. So we will measure again the Fibonacci from here to here, and we want a price to rally up to the 50% Fibonacci retracement zone. This is a bearish setup. Now we will use again a trading drill. Pay attention to the trading triangle to enter the trade. Very often, the professional will hide their stop loss if the signal is fired around the 50% zone. They will hide their stop loss behind the 61.8% level. You do not have to do exactly that, but I need to tell you that. But this will depend on your risk tolerance. All right? I will be recording another video about how a trader can control the risk instead of exposing themselves and losing big money another time, okay? So this is about trading Fibonacci, tips and tricks, using a double top, a double bottom, an inverted head and shoulder pattern, and a head and shoulder pattern, looking for the price to pull back or to rally into the 50% Fibonacci retracement zone. This will provide us with a beautiful bearish or bullish setup. The setup is not a signal. We will use the trading drill. The trading drill is about finding a valid setup. So trader must spend more than 70% of their time looking for the best setup. Once we find a setup, talking about technical trading, we want to now go to Google Finance, put the epic of the stock, check the news, read the news, be curious, okay? Check the sector. If you are trading Forex, check Forex Factory, which economy you are trading the Euro USD. You want to know what's happening to the Eurozone and also what's happening in the United States, what the Federal Reserve is doing, what the ECB is doing, and what's the current policy, okay? Are they devaluing their currency? What's going on? You are trading New Zealand dollar, what they want to do now, okay? All these kind of things are very important to make, okay, excellent decision. If you want to invest, you want to know what's happening, all right? Price pull back to the 50%, that's the setup. You use the trading drill and apply the trading triangle, okay, to make excellent decision. Very beautiful and very powerful. When we are talking about Fibonacci trading, it's a very exciting subject. But a lot of traders get into trouble very quickly because one of the common Fibonacci mistakes that traders are making is that they are violating the market pattern. There are three market patterns: the rising channel, the declining channel, and the horizontal market pattern. If you are using Fibonacci and you are aligning with the market pattern, you are likely to make consistent winning trading. This strategy is valid for swing trading, but we can also use it for swing trading and investment and position trading, but we can use it also for day trading. On the 2-hour chart, look for this pattern. On the 4-hour chart, look for this pattern, or even on the hourly chart. All right, but I would prefer the 2 hours, the 4-hour chart. You may see also on the hourly chart, even on the 30-minute chart for day trading purposes. So somebody who is using the TSTW24 may look for this setup, and then once you see the setup, okay, check the economy news and then go to the first best time frame. Somebody who is using the TSTW08 for swing trading or position trading, I would prefer that trader look for this setup at least on the monthly chart. You may see even on the yearly chart. All right, even on the yearly chart, quarterly chart, monthly chart, minimum weekly chart. All right, to have a solid, beautiful pattern. Weekly chart, monthly chart, you see on the monthly chart. I'm looking at Nikkei 225, okay, and I'm on the monthly chart, okay. But if I switch my time frame now to the quarterly chart, all right, you can see that we have a double bottom here. You see here, this is double. You see, price went down, price went up, pulled back. I got only a few seconds left, ladies and gentlemen, and the price went up, okay. And then the price pulled back, okay? Sometimes the price will stop at 38.2, sometimes it stop at 50% Fibonacci retracement level. All right? Look for this pattern, and you will be amazed how this is happening all the time. All you need to do is to keep your eyes wide open. You see here, you went up from here, all the way up here, and then pull back to the 50% Fibonacci retracement level, and from there, it starts going up. I hope you have learned something from this video also, okay? And we put it into use to make excellent trading and investment decisions. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 traders. Speak to you soon.